Underwriting deals is such a major pain point for people. Most don't want to do it, and the people that are good at it are few and far between. That is why after 6 years of being in the industry and buying over 1,200 apartments, using my best-selling multifamily deal analyzer, I created Real Estate Lab, a full suite acquisition software for multifamily investors. We have built a product that helps investors automate their acquisitions and close more deals, all in a cloud-based platform. You can go to realestatelab.com and sign up today using the promo code TAG2 for 10% off your first 12 months. This is David Tupin. Thanks for listening.
Welcome to the Apartment Guys, where we dive deep into all things multifamily investing. Our mission is to educate, inspire, and empower real estate investors to reach their highest potential. Each week, host Tate Seamer interviews high-level guests from all over the industry who are sure to bring valuable, actionable ideas that will propel your career to the next level. Whether you're just starting out or a seasoned investor, you are in the right place. And now your host, the Apartment Guy, Tate Seamer.
Welcome everybody back. Another episode of the Apartment Gurus coming at you, formerly the Apartment Guys. We're rebranding and we renamed the show, and that's super exciting for us. And I'm also super excited to have my friend Tom Dunkel on the show today. And Tom is a self-storage syndicator. And as many of you know, self-storage is a very close cousin to multifamily. In fact, it's a lot like multifamily, except you don't have tenants and toilets, right? So,
exactly.
Yeah. So, but you syndicate just like we do. You collect rent, you have collections, you have asset management, property management, all that stuff. So there's some really great crossover. But Tom has a background in corporate finance and over 25 years of real estate and investment experience. He also brings an extensive experience to Belrose Storage Group, taking the company from startup to a world-class organization. Tom has specialized in discount asset opportunities nationwide since 2006. His financial savvy, open communicative manner and integrity have seen him help alternative investors achieve their wealth building goals. As a dedicated mentor to investors and entrepreneurs, Tom has also taught classes on real estate and mortgage note investment at the CAMA Academy, along with Belrose Asset Management co-founder Joe Downs. Graduate of the University of Delaware, Tom earned his MBA at the College of William and Mary. So, Tom, really excited to have you on the show. Looking forward to this, and thanks for being with me.
Thanks, Tate. It's a pleasure to be with you and the listeners today.
You bet. So that was a pretty complete bio, and gives us a pretty good picture of who you are and what you're up to. But if we could just kind of hear it from the horse's mouth, I'd love to get your story or your background and kind of how you got to where you are today and what you're up to today.
Sure. Yeah, I'll try to keep it brief. I do tend to get long-winded. I don't know. Maybe it's because I'm getting up in age, but I do have a lot of stories to tell. But so I grew up outside Philadelphia and moved away for a little bit, but have been back here now for over 20 years outside Philly. I was here in time for the Eagles Super Bowl a couple years ago, so that was exciting. But I started out in corporate life, doing mergers and acquisitions in the aerospace industry. That was a ton of fun. I worked with some amazing people, like retired generals and colonels and Air Force pilots and fighter pilots and astronauts even.
Wow.
And so that was a ton of fun. And that's when I was down in the DC area for a little bit. But wanted to get back home. So I came up to Philly and went on the investment banking side. Whereas in the aerospace industry, I was actually with the company that was growing through acquisition. Decided to take what I had learned and go on the advisory side. So I was advising software and IT companies on mergers and acquisitions and raising capital. So that was a ton of fun, but just never felt quite fulfilled. I always wanted to go out and do something on my own. And so my timing wasn't great, but 2006, I left corporate America and got into real estate, which is something I wanted to do for a long time. In fact, when I graduated from college way back when, the first thing I did was get my real estate license. I wanted to go into commercial real estate, but back then the real estate market was in the toilet and there was nothing going on there. So that's how I ended up going the corporate route. But along the way, certainly those early years, learned a lot of tough lessons. Lost a ton of money in the real estate crash, the financial crisis, and that 07, 08, 09 period. But stuck with it. Decided to look at some other avenues within real estate to reinvent myself. And so I discovered distressed mortgage debt back at that time. And I also connected with my business partner, Joe Downs, back at that time. So we've been together 12 years. We're still doing distressed debt. That business has been good to us. We've generated over 50 million of revenue over the years in that business. We've raised a lot of equity, a lot of high net worth investment capital along the way. But that business is very volatile. It's very up and down. And so we've been looking for ways over the years to try to smooth that out. So we looked at lending. So we did some hard money lending for a while, but just wasn't really getting the traction there. We had started looking into self-storage in probably 2017, 2018, right in there. Yeah. But we didn't actually pull the trigger on building a business in self-storage until we got all the pieces together. We wanted to go out, we wanted to get educated, we wanted to surround ourselves with the best people. So we went and did that, joined some mastermind groups and that kind of thing. So we didn't actually pull the trigger and acquire our first facility till 2020. But we kind of hit it out of the park on that first facility. And now we're about to make our 10th acquisition. So we're just having a lot of fun. We've got a great team. We've got some operations experts. We've got the contractor experts in place. And we've really been working on our just making sure we've got the team together. And of course, in today's environment, we're just trying to keep our finger on the pulse of what's going on out there because everything's very dynamic right now, as everyone knows. But we're just trying to do the best job we can for our investors.
Love it. That's an awesome background, awesome story. My dog decided to chime in right there in the middle. I apologize. Got a delivery coming to the door here. He's being the watchdog. So a few things to highlight for the listeners is, Tom, unlike so many people in real estate these days, Tom went through the 06 to 09 crisis and knows what it takes to survive a downturn. That was a severe downturn. And there's a lot of people in this space in the commercial space that didn't experience that. And all they've experienced is the last 8 years or so of, very, expansive markets and returns and a very forgiving market, because if you make, a mistake here or there, your appreciation will take care of that when you're in a appreciating market like we have been. But as everybody knows, it's June 23rd as we record this, and the economy is changing, and interest rates have spiked. Inflation is, depending on who you listen to and who you believe everybody agrees that it's happening and is significant. And, we could be heading into a recession. And so I really enjoy talking to people that have had the experience of surviving a downturn, because you bring a perspective that other people just don't have. So yeah, I think it's really cool that you guys just did your first deal in 2020. Did you say you're on your 10th deal now? Wow.
Yeah, that's right. We're about to close on our 10th. Yeah.
Yeah. That is like 2 years of success and growth and, just crushing it. Yeah. Sounds like.
Yeah. Well, like I said, Tate, it was, we were getting educated, but we weren't really comfortable pulling the trigger until we knew we had all the pieces together. So when we got the operational pieces together and the marketing and all that stuff, I mean, look, you know, it's the same in multifamily or residential, whatever part of real estate you're in. It's easy to go buy stuff, right? You just, you know, pay cash and close tomorrow. You know, you can buy as much real estate as you want, right? Yeah. But to do it the right way, and which is how I was taught, you know, in not only in my corporate life, but you know, later on is, you know, you really got to be diligent. You got to have a plan. You got to have the right people around you and the right partners. And so that's what really helped us accelerate our growth. Yeah. Yeah. And again, if you're reading between the lines here, it's like one of our core values is teamwork makes the dream work. And, you know, this is very much a team sport, commercial real estate in general. And in particular, multifamily and self-storage. I don't know about you, Tom. I don't know too many people at all that are, you know, solopreneurs in this space. It's everybody's got a team. Everybody partners up on deals, or almost every time there's some sort of partnership involved. And everybody's raising capital too, which is one of the things I really want to dive into here with you. But you know, we've had a kind of similar couple years where we went from 0 to 572 doors starting at the end of 2020. So we had a big year last year, and we're about to double that this year. So we've got two deals in the hopper right now, both under contract, both one's through due diligence, the other's in due diligence. So it's exciting to talk to you about your growth. And so give us a look into your team a little bit. You mentioned you have is it a director of operations, or what do you call that person? Sure. Yeah. So just to pick up on something you said a minute ago about your teamwork makes the dream work. We have a similar core value at Belrose Storage Group, which is we call it SEAL Team. Because, you know, we never wanted to be a big company, and just like, SEAL Team 6, you know, we feel like we're an elite fighting force. We work fabulously well as a team. Everybody, you know, supports everybody else. And we go into every acquisition, knowing what the plan is, you know, making sure every detail has been covered. And, we just really bond together to make it happen. So I love that. Yeah. But yeah, so our team, consists of myself. I'm the chief investment officer. My partner Joe Downs is the CEO. Tim Kane, who's our other partner, he's our chief operations officer. And then Gretchen Frischella is our what we call our chief of staff. So she's kind of the glue that kind of keeps everything together. But really, the way that breaks down is Joe's in charge of lead generation and acquisitions. And then once he gets a deal through initial underwriting, it kicks over to my team, and we do the full underwriting. We make sure that the investment makes sense. Then I'm in charge of going out to raise the capital. Once the deal's closed, then we turn it over to our partner, Tim Kane, and he makes sure that the operations are transitioned and that we're immediately hitting the ground upon closing with our value add strategies, because we're acquiring existing value add facilities. And then we just kind of keep rocking and rolling from there with some tight reporting and, following our key metrics and all those cool things. So it's great the way the teams come together, for sure. Yeah.
So do you kind of all asset manage, or do you have that delegated out?
Yeah. So my partner Tim's in charge of operations, so that includes asset management, and so we have some outsourced services there that we use that help us, stay on top of each of the facilities. We hire our own managers. We don't use third-party managers per se, but those managers are running the facilities the way that we want them to be run. Focusing on keeping the delinquencies low, keeping the rents high, and keeping the facility in good operating order. So works well.
Where, just curious, geographically, where are your properties?
So we're generally East Coast. Right now we're Maryland, Virginia, North Carolina, Georgia, and Florida.
Wow, you're in some great markets. That's exciting. Are they mostly urban markets?
No, not at all. I mean, we're like I said, our elite fighting force, the SEAL team. We're not looking to go head to head with the big guys. We like to be smaller and nimble. So that puts us in the secondary and tertiary markets that are still growing and still exciting. But it's not crazy 2% cap rates and stuff like that. I mean, we're still finding deals in the 6, 7, 8 cap rate range.
Mm-hmm, mm-hmm. How did you guys hone in on self-storage? You had a wealth of experience across asset classes. How did you arrive on solely focusing on self-storage?
Yeah, great question. I mean, first and foremost, we look at ourselves as an investment company. Mm-hmm. And so as I mentioned earlier, we've done very well in the distressed mortgage debt business. I mean, that's a very high margin kind of business. But as I said, it's very lumpy. Those transactions come up infrequently. So it was tough to build a business plan around those. So, we did look at things in residential, but having lived through, my own residential rental portfolio, I was not a big fan of going back into that business. Lending was good, but like I said, that's actually somewhere where we failed to get the right team together. So we never really got the traction that we wanted. I think that's a potentially a pretty cool business, but it's super competitive.
Hard money lending.
Hard money lending, yes.
And on residential, like single family projects. Yeah.
Yep, on residential, fix and flip stuff. Yeah. And actually, I spent a decent amount of time looking at multifamily. Getting into that business, and I've actually participated as a limited partner in multifamily deals since 2013, I think. So I've had a good time in that space, just using my self-directed IRA and other funds to invest there. But I was never able to quite, again, back to the team. I wasn't ever quite able to get the right team together there to make it into a business. Mm-hmm. But for whatever reason, the world works in mysterious ways. Things just seem to really line up for us in self-storage. Mm-hmm. And we just love the asset class because, aside from our great team, we love the asset class because, of course, just like multifamily, it's a hard asset, secured, it's built on real estate. It's not going anywhere. It's not going to zero. That's for sure. It's cash flowing, right? So we have tenants paying every month. We try to get them on auto pay as much as possible, kind of like a Planet Fitness model where, they just sort of set it and forget it. So we love that. A little bit of a difference, I would say, for multifamily is our operating expenses are quite low. Yeah. And our CapEx budget is quite low. So, in a self-storage situation, when we have a tenant that leaves, we can typically turn that unit around in less than one day. Sure. So it's not unusual to have one tenant move out in the morning and a new tenant move in the afternoon, because we can just go in and sweep it out and put it back up for rent. And in these markets where, the demand is high, they can go like that. So we love that. And again, the CapEx, we're not trying to make it like the prettiest, fanciest facility on the planet. We're typically in the, kind of the C plus, B minus range as far as asset, what the class of facility that we're in. So people are really just looking for a safe place to keep their stuff. So we do a little bit for signage and curb appeal, mostly just keeping, trash picked up and things like that. But we're certainly not, in multifamily when, you have to swap out, the Formica for granite countertops and, and lighting packages, so there's guys out there like the ones I invest with who are experts at that, and they do really well with that. But, we're able to turn around these empty units pretty quickly, which is great, and just keeps the cash flowing.
Yeah. I mean, that's that scenario of moving somebody out, coming in, sweeping the floor, maybe changing the light bulb, making sure the lock still works. Like quite frankly, as a multifamily operator, that sounds dreamy.
Yeah, I'm sure.
Yeah.
Well, as a former residential landlord, it's very, very dreamy. I'm enjoying it quite a bit because
I bet you are.
A lot of this,
there's pros and cons to both asset classes, multifamily versus storage. But with storage, there's just so many less moving parts. Like, you don't have, or you have very little risk of, say, like an insurance claim from somebody, like a slip and fall sort of thing, or you have a pretty significant turnover to deal with, and as far as like what you have to do to the unit to get it ready, and you're taking, like you said, a lot of expenses out of the budget as well when you go to self-storage. And one thing to really talk about with self-storage and multifamily to a degree as well is the recession-resistant aspect of it. It's self-storage is an asset that people need, and as people maybe downsize due to a recession, they want to keep their stuff, and so they need a place to store it. It's whatever, $100, $150 a month kind of thing, to store their stuff, and they're not going to get rid of their stuff versus paying that monthly payment. So recessions can almost, especially in C class and B class, whether it's multifamily or self-storage, recessions can almost increase demand on these two assets. And of course, when you're in an inflationary environment, your rents are going up and your NOI is going up because your expenses are relatively fixed, especially in self-storage. So, there's a lot of cool things about it. At Greenlight, we definitely are believers in mastering the lane that we're in. And
right.
With our recent growth, we're very committed to staying in one lane. We occasionally will get something from a different asset class sent our way, and it's pretty easy to say no right now because of our hyper focus on being successful in multifamily. I'm sure you're probably in the same boat now that you found this lane that you like and you're doing well with. Right. Why would you do anything else, right?
Sure. Yeah, exactly. And there are many similarities between multifamily and self-storage. In this potential, some people are already saying we're in a technical recession. But I think in this kind of environment, like you were saying, I couldn't agree more, where those B and C class, whether it's multifamily or self-storage, they're going to do well. They're going to continue to do well. It seems like with storage, any kind of disruption in the world, it's death, divorce, downsizing, displacement, all those D's seem to generate that kind of demand for self-storage. So we actually have in our investor deck, we have a slide in there that has a graph, and it goes back to the 1980s charting the GDP, and GDP, of course, is going like this,
up and down,
all over the place with recessions and expansions and recession and expansion over and over again. And then we overlay on top of that self-storage occupancy over that same period, and that's pretty much about like this.
Wow. So for the listeners that can't see, it's a straight line. Like occupancy stays consistent all the time in self-storage.
Yes.
Yeah. And a well-run multifamily property should be the same. Like if you're priced right, if your amenities are good, if you're keeping up on CapEx, like your occupancy should be, no matter what the market is, your occupancy should be consistent. Right. Tom, there's this, the S.A.F.E index. Have you heard of that before? S.A.F.E with an E at the end. It's
I believe so. Is that the risk adjusted? Yeah,
exactly. And it talks about risk levels, and specifically in real estate and different asset classes, right? So like your office and retail are really like at the top of the S.A.F.E index as far as being the most volatile. That's really what the S.A.F.E index is measuring, is volatility. So, then you come down through like assisted living and,
hospitality.
Thank you. Yep. And then you get down and restaurants and all that stuff. Then you get down
industrial. Yep.
Industrial. Thanks. Yep. And then at the bottom of the index is multifamily. Mm-hmm. And the only thing lower than multifamily is self-storage as far as being volatile. So, right. I mean, you're in a great lane, and when you're in a lane like that, a downturn is almost something to get a little bit excited about, I think, which, most people are dreading a downturn. And if you are invested well in cash flowing properties and you plan on holding on to them for, the 5-10 year range or whatever it looks like versus a 2 to 3 year range, you can pretty much rest well at night knowing that, usually a downturn cycle lasts a year, 2 years kind of thing. And if you're going to cash flow through that, your rents are going to go up with inflation. Mm-hmm. And when you get into the next expansion period, it's going to perform very, very well for you. And the value is going to be great. And, the downturn really shouldn't affect you too much. I'd say the only variable in that is what interest rates do. If you need to refinance or sell, cap rates could go up with interest rates. We haven't really, in the multifamily space, we haven't seen that yet to much degree at all. But it's likely to happen. It's just the higher interest rates mean less buying power. And so sellers are going to have to adjust their expectations. But no, I'm excited for you, Tom. You're well positioned for sure.
Yeah, thanks. And another thing, Tate, I think it works for both multifamily and for self-storage is something you kind of touched on, but just to highlight a little bit is the optionality that we have, because here we have a hard asset that's cash flowing and performing, right? So if the market does adjust and the values of our apartments and our self-storage facilities, they go down for a period of time, we're still able to operate through those periods of time. And so we just choose not to sell then, right? So because we have that option to continue just working on the cash flow, continue executing on our value add strategies through that downturn. And then when it is a good time to sell, then maybe we look at selling.
Yeah. And again, just to not to be repetitive, but just to keep it simple, the key is a couple things: a property that cash flows, a property that's going to have high demand and fixed interest rate debt through, the next 5 years at least. And you should be just fine. You should be rocking and rolling. So, Tom, I want to talk to you for a sec about raising capital. It's something that everybody on the show, all the listeners are going to be interested to get your perspective on. I certainly am. We're constantly raising capital for our different projects. And it's a part of our business that kind of started to develop after we started landing deals, right? We got really good at the acquisitions game, broker relations game, negotiating, writing contracts, doing due diligence, and getting to the finish line. And the capital raising game for us was, I wouldn't say secondary, because it's certainly, at this point, it's not secondary at all. It's a huge part of our game, so to speak, our model. But it's something that we are every day learning and growing and doing our best to get better and better at it every day. You have experience in raising capital, high net worth individuals that you mentioned that earlier. Can you just kind of give us an overview of your perspective on raising capital for commercial real estate and kind of what it takes, and as far as mindset and systems and processes? And I know I'm asking you a big question here, but I know you can handle it.
Yeah, it's okay. No, I appreciate that. And from our perspective, Tate, right, as syndicators, right, for you and I, this was something that was kind of a big aha for me a few years ago, is that, capital raising really is an all the time kind of process, right? It's, if you wait until you have a deal to then go to raise the capital, you're going to be scrambling. I mean, maybe you can pull it off, but if you're really going to do it the right way, especially as, deal sizes get larger and larger, I mean, you can't just, expect to pull that off in a real short period of time. So one thing we did a few years back is we did, right when we got into self-storage, we said, hey, we really do need to make sure that capital raising is just part of our everyday activities, whether we have a deal or not.
Yeah.
So that's been a big aha for us. And then, and then from the, investor side of the world, I love, one of the benefits of investing in other people's deals is you get to see how they interact with their investors.
Yeah.
So as a, high net worth investor since 2006, I've invested in a lot of other people's deals along the way. And so I feel like I've picked up, some of the best practices, some of the things I liked. I was able to steal and some of the things that, I didn't like. I was like, okay, make sure we don't do that kind of thing. But for me, I just want to help people. I think, you can see the stats in our country about how few people are able to retire, and live off of the income generated from their assets, at 65 or 70 years old. It's really, really unfortunate and sad. So, if I can just, help anybody, generate that passive income so that they can go out and live their best life. I mean, that's really at the end of the day what I'm trying to do. It's much bigger than, a self-storage deal or a multifamily deal or whatever kind of deal. It's really, we want our investors to be the heroes of their families and, be able to really go out and like I said, live their best life. So from kind of the mindset point of view, that's where we're at. And, but I just really enjoy it. I had a great interaction yesterday with one of our investors. He was calling me up, actually emailed me just with some great questions. And I love that. I love hearing from our investors. And they weren't easy questions. He was asking kind of like we were talking about earlier, cap rates and interest rates and inflation and, where's the world going? And of course, I don't have a crystal ball, but I was able to say, hey, from my experience, here's where I think we're headed. And this is how I think, self-storage is going to perform through that period of time. And this is an investor who's, he's invested in multiple deals with us, a decent chunk of change. And just, I happen to know him and his wife and his family. And so it just makes me feel good that I'm, out there able to provide this great service to him and our other investors.
Yeah. Okay. I mean, that was gold right there. That listeners, if you hopefully you were paying close attention. If not, go back and listen to the last 3, 4, 5 minutes of what Tom had to say. But look, this is like textbook, having your values first and having your mission first and leading with that and leading with providing value. That is really the recipe for success in really any part of this business, but I think especially in raising capital. You said simply, you just want to help people. And, when you're authentic about that and you're coming from the heart, first of all, you're not going to come across as needy or desperate or, just trying to get their money kind of thing. You're going to come across as somebody that's got their back, that's really interested in their long-term success and, have their best interest at heart. And so I think that's money right there. I love that you said you're helping people live their best life and be heroes of their family. Like, that's powerful stuff. And, I think all of us want to live our best lives. Like, you ask every person on this, listening to this episode right now, we're all about doing what we're doing so that we can facilitate our best lives. And no matter what that looks like, time freedom, money freedom, geographic freedom, et cetera. So I think that's fantastic, Tom. And like, I think listeners can model that mindset. The other thing about when you're coming at it from a value add perspective, our method of adding value at Greenlight is the podcast. We've done meetup groups. We go to masterminds, and we have one-on-one coaching calls, consultation calls with anybody that wants to book calls with us, listeners, it really anybody, and there are no strings attached, no agenda. They're just kind of mastermind sessions where we talk for 10, 15 minutes about your business,
Right.
Where you're trying to get to. And kind of like your call yesterday, it's like, you're talking about high level stuff at a high level. And that stuff for me is really fun. And I really enjoy the one-on-one interaction. Yeah,
For sure. Yeah, it's very fulfilling for us and hopefully for them.
What's your do you have like a landing page, click magnet, CRM integration, and all that stuff?
Sure, we do. So if you're asking for our website, it's www.belrosestoragegroup.com. It's B as in boy, ELROSE storagegroup.com. And anyone that visits there can also register on our investor portal so that they can be informed of our upcoming investment opportunities. But even if you're not interested in that, if you didn't like anything I had to say today, any listener can go to that website, and there is a free resource there. You don't have to give your name or email or phone number or anything. But again, it's just part of the value add that we like to do here. Belrose Storage Group. So over the years, I've developed a process I call safe investing, and this is really a program. It's an ebook. It's just kind of a glorified PowerPoint, really, but I guess these days I call them ebooks. And really, what it is, it's a due diligence framework for busy, high net worth investors. If they're doctors, lawyers, engineers, executives, whoever. If you don't have a lot of time, but you want to get out of the stock market roller coaster and get into hard assets like multifamily and self-storage, it just gives a framework for doing that due diligence. So the SAFE method, just real quick, S is for sponsor. Who's running the deal? What's their background? Have they done this before? Et cetera. So the book gives just a series of questions to ask about the sponsor. Mm-hmm. And the ultimate question there, Tate, is, can I sleep at night knowing that this sponsor has my hard-earned money? And so that's a big question. A is for asset. What asset am I investing in? If you're investing in Bitcoin, I'd love to hear what you think you're investing in, because I have no idea. But if you're investing in one of our self-storage syndications, you're buying membership interests in an LLC that owns a piece of cash flowing real estate. Mm-hmm. And then, same thing with multifamily, or, you could use this filter for any asset out there, but it does help to just clarify for people, what is it exactly that I'm investing in? And one of the questions is, can you explain what you're investing in to your mother-in-law? So just got to keep it simple.
Right. Yeah.
F is for financials. What do the financials look like? And then E is for exit. How do I get out of this thing, and when, and what has to happen for that to come about? So I just encourage folks to go to the website. Like I said, it's free. You don't have to give your email or anything. It's just a gift for me to you. It's something I generated over the years of my investing, mistakes that I made. And so I just was able to compile it together for others to hopefully benefit from.
Yeah. And again, listeners, the website address is www.belrosestoragegroup.com. Belrose is spelled with one L, otherwise spelled as it sounds, belrosestorategroup.com. It sounds like that your ebook is geared more towards the passive investor that's going to invest potentially in your projects. Yeah, for sure. And investing in our projects and your projects, whichever. Just a resource to help people, because I know, when I think a lot of investors out there, a lot of high net worth investors, they've got money, but it's just so easy to go to Schwab.com and click, buy their stock, bonds, and mutual funds, and they know they should be in other asset classes like multifamily and self storage, but it's sometimes hard to make that
that leap because they don't know where to start. So this due diligence framework gives them the ability to look at one of your deals, Tate, and say, okay, who's the sponsor? Well, it's Greenlight. Okay, those guys have this track record and they're knocking it out of the park. Okay, I trust them. Here's the asset. It's a multifamily deal. I know what that is. I can get my head around it. That sort of progression. And that way, hopefully, these folks will, again, just be able to live their best lives because they're getting into these, what I think are superior asset classes to stocks, bonds, mutual funds.
I mean, all you got to do is look at the last month of the stock market, the volatility, and the market losing 5% in a day. And I mean, that is like such a different environment and climate than commercial real estate, and specifically those lower volatility assets like multifamily and self-storage. Like if you're in a cash flowing asset and you've got fixed rate debt and very little variability in your occupancy, and like you're set, you got it, and you can watch the stock market go up and down and not be affected by it emotionally because you're, like you said, Tom, to your point, you're in a superior asset class. And again, back to the recession resistance aspect of it, and the cash flow, the equity growth, the tax advantages, like your cost segregation studies and your write-offs from that. Like it doesn't get any better in anything that I've ever seen than these spaces that we're talking about.
Yep. Preaching to the choir, Tate.
Yeah, I know.
And that's coming from somebody. So like I warned at the beginning, I tend to be long-winded, but I did live through the dot-com bubble as well. And I was in investment banking at the time. And we had companies coming in to pitch their companies, their deals to us. We'd be investment bankers sitting around a big boardroom table. And I swear that at the end of the presentation, I didn't know what the heck the guy was talking about, eyeballs and click through all this stuff. And so ultimately, I guess maybe I should have spoken up more because I was right. 2002, boom, all that, internet bubble bursts. And so, but that, we're certainly going to have cycles in real estate, but nothing like, crypto or internet, the early internet and et cetera. So.
Yeah. One stat to kind of support your point is in the 06-08 crisis, I think there was a 7 or 8% default rate on single family houses. And the default rate on multifamily was 0.7%. So you're talking about just a massive difference in stability and, right. Something that, again, helps you sleep well at night. Tom, let's start to wrap this up a little bit, running out of time, but I wanted to ask you if you had any like thought leaders, authors, speakers, type people, especially in the realm of raising capital that have been important to you, any books or anything like that?
Sure. Yeah. I've got several. In fact, right before I got on with you today, Tate, I was in a brain trust session with Oren Klaff. Oren Klaff, for those who don't know, is an author. He's actually raised gazillions of dollars for commercial real estate and other business deals over the years. But he wrote the book, Pitch Anything, many years ago. I don't remember exactly when it was published, but probably give or take 10 years ago. Mm-hmm. And so we just really like his messaging. And so we're big fans of Oren Klaff. He's since come out with a second book called Flip the Script. And then he has these, mastermind type groups that you can join as well. So we're just actually getting started with that. And so, but so far it's just really solid and very focused for folks who are raising capital. I mean, it's really probably 80-90% of the messages that and the things that are taught have to do with raising capital. So big fan there. I mentioned earlier just about building a team and whatnot. So a great book there is Who Not How. I think Yeah, a lot of entrepreneurs, like we try to like figure stuff out on our own, or running around banging our heads on stuff. And meanwhile, if we did a little research and reached out to our networks, you know, maybe be able to find somebody who's an expert at that particular thing, and they can save you tons of time and aggravation getting you over that hump. So that's a big thing that we do, is look for the right person, not really the right solution that we can implement.
Yeah.
But those have been great resources. I'll share one more. It's not a business book, but it's one of my favorite books of all time. It's called The Last Place on Earth. It's about the race to the South Pole at the very beginning of the 1900s. So it kind of has nothing to do with business, but to me, it has everything to do with business and leadership, because the guys that were ultimately successful, they weren't the best capitalized. They weren't the quote unquote smartest, but they were very diligent with their planning. They put the right team together, and they were gritty. They just stuck to their plan, whether the weather was good or bad or whatever. So I just really love that book.
That's a great one. What a great suggestion. Didn't see that one coming. The first two, I've Pitch Anything's a classic, and I think is fantastic. I have it on audiobook. I also have Who Not How on audiobook. Both excellent reads and great for your business. So
yeah,
love that. One last question, Tom. What do you do for fun in your free time around Philly and whatnot?
Sure. Well, I'm a golfer, so I love to get out and play golf. I love the fresh air and the competition, and just trying to hone my craft. So that's a lot of fun. And I do some hiking and camping and those kinds of things. And I've been playing guitar since I was a kid, so I like to hang out and play a few tunes, and so it's a great way to relax.
That's awesome. I play guitar as well. I started when I was 9 years old. So
awesome. Okay, you got me beat. I was 11. You got me beat.
Oh, wow. That's amazing. Yeah. I'm not nearly as good as I should be for having played that long, but
same with me.
Yeah. I don't know. My fingers just aren't that fast. I'm pretty good, like rhythm guitar stuff, but like soloing and whatnot is a challenge for me. But yeah. Well, this has been fantastic, Tom. Again, let's just let the listeners know where they can reach you. Is your website the best place?
Sure. It's belrosestorategroup.com. If you want to email me directly, it's tom@belroseam.com. That's BELROSEAM as in assetmanagement.com. And hey, if you want to pick up the phone and give me a call, I'm always up for a good conversation. My cell phone number is 610. That's 610-761-8940.
I think you might. We've done like 106 or so episodes. You might be the first person to drop their phone number on the episode, which is fantastic. Like listeners, like again, like when we offer this stuff, when we offer consultations and we want to talk to you, like take us up on it. It makes us feel good. And it helps everybody. It's really gonna give you like an injection of energy and direction and knowledge to give Tom a call and just collaborate, mastermind, and brainstorm.
Absolutely.
Like that's great stuff. I hate the phrase "pick your brain." Like that's always annoyed me to death.
Right.
Because it sounds so selfish and like intrusive and everything else. But
if you call me, I tell you what, I'll give you a little incentive. If you call me, I will tell you which astronaut I had lunch with.
Oh wow. There you go. That's awesome. Well, listeners, give him a call. So, Tom, thanks a ton, man. This has been a great hour or so. I learned a lot and I got a lot of inspiration out of it. So I'm really happy for your success and hope that you keep on crushing it.
Thanks, Tate. You too. Good luck with everything out there in Utah, and great being with you.
You bet. Yeah. Thank you, listeners, for listening to another episode of The Apartment Gurus. We're happy to have you. And if you're listening to the end of these episodes, and really taking them in, like you are moving the needle and you're doing good things for yourself and for your business. It pays off in the end to gain as much specialized knowledge as you can. That said, taking action steps, picking up the phone, touring properties, writing LOIs. Like that's where the rubber meets the road. And so you can listen to as many podcasts as you want, but if you don't take action, it's not going to pay off. So it's a balance, right? So with that, listeners, thank you, Tom. Thank you. And we'll catch you on the next episode of the Apartment Gurus. Take care, everybody.
Thanks for listening to The Apartment Guys with Tate Seamer. Tate and friends are grateful to have you as a loyal listener. If you like what you've heard, please subscribe, rate, review, and share with friends on your Apple Podcasts, Google Play, Spotify, or any other podcast platform. Also, check out Tate's YouTube channel for videos of many of these episodes and more. Until next time, take massive action steps and rock on.